answering your questions about retirement. It's Money Talk with Michael Eastham.
5 years ago, when I left my old company, I rolled over $200,000 of my $400,000 401k into a variable annuity that was recommended to me by my broker. He said it was safe and would guarantee income. It got hammered in COVID crash and hasn't fully recovered. I also keep getting hit with fees. I'm not sure what to do since there are 2 more years before I can get it out without a penalty. Can you offer some advice?
Well, the variable annuity question is one that comes up quite often, and this is a big challenge because one of the biggest issues that I find with variable annuities is that even the brokers and advisors that sell them don't really understand them. And this can be a major problem. You see, variable annuities tend to have much higher fees, especially if they provide some sort of a quasi-guarantee. You have mortality and expense charges, then you have administrative fees, then you have sub-account fees for all the mutual funds that exist inside of them, and then you have rider fees that provide that quasi-guaranteed income. And they can add up to 3, 4, 5%. It can be very, very costly if you're not careful. And so in a case like yours, then you have to evaluate the cost of getting out versus the cost of staying in. So for example, if your fees are 3%, which if you've got a rider on there, which is what it sounds like based on your advisor's suggestion of guaranteed income, then you're probably paying at least 3% in total. Well, 3% of $200,000 is $6,000. That would be the cost to you every single year. That means if you have 2 years left, then you're going to end up paying another $12,000 to hold it to maturity, plus the potential for additional stock market losses. Whereas if the exit fee or the surrender charge is 2%, well, it may only cost you $4,000 today to cut your losses, move it to some other type of an instrument that makes more sense for you. Now, every situation is different, and that's not blanket recommendation, but those are some things you need to consider. Now, what do you do with it if you decide you're going to move it out? Well, there's a couple things. One is if you do like the guarantees of the annuity or some of the aspects or characteristics of an annuity, well, there are several types of annuities that can provide the principal protection, lower or non-existent fees, and guaranteed income. So that's one option. The other option is to consider an allocation of instruments that are designed to pay interest and dividends, providing you more predictability, in many cases lower risk. But all of those aspects need to be considered in the context of your individual goals and your individual situation. So think about all of those pieces. I'd love to help you evaluate your cost and benefit so that you can make an informed decision. So just give us a call and I'll be happy to talk to you further and help you make that decision. Thanks so much for that question. Really appreciate it, and I look forward to speaking with you soon.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.